All right, we are joined, of course, by Efosa Aluyi, he's the head of investments and Sankore Global Investment. Efosa, good to see you again. Good morning. Thanks for joining us. So much to discuss here. I think I want to start off with the U.S. Federal Reserve Governor Waller saying that the Federal Reserve should not be in a hurry to cut interest rates. What do you make of that? What does that mean for policy direction for the U.S.?
I mean, that essentially ties into one of our themes really about this whole idea of interest rates sort of staying higher for longer. The truth of the matter is that inflation has come down somewhat. Nevertheless, it remains somewhat shy of that 2% target that the Fed has. Again, if you look at the recent trend we've seen with inflation, it's basically been sticky downwards, right? So that trajectory that we've seen from about 9.1% that we had in July of 2022, where it really came off very strongly up until we hit around 3.7% thereabout. From there on to that 2% path, it's basically, been very, very sticky. And the truth again is that the Fed is going to have to adjust interest rates for one or two reasons, right? One would be if inflation comes in line with the target that they have set, and then they can decide to, pretty much loosen monetary policy, or if the economy shows signs that it actually does require some support, then they would actually go ahead and do that. Now, the indications seem that the Fed is likely going to cut rates as a result of inflation really hitting their target. Again, like I said earlier, inflation has not been moving very strongly downwards, so that would create some sort of delay. We expect that we would likely see some rate cut this year, but again, we don't think that rates will drop as fast as markets anticipate, as fast as a lot of people also anticipate. Recall that the labor market remains resilient and very strong. The economy is doing really, really well. So essentially easy monetary policy right now could serve to essentially create inflation in the economy, where you're basically trying to bring inflation down. So I totally agree with his comments and thoughts around the fact that the Fed certainly will not be in a rush to start to dial back on its tightening stance. You will need to see a couple more inflation data points to get a really good sense of where things are at for the Fed to then start to move on that. Chairman Jay Powell had hinted at his meeting, I think about last week, in the aftermath of the FOMC meeting, to say that they were still on pace to cut rates about 3 times this year. You recall that is down from about 7 times that the market had expected sometime last year. So again, I think that inflation trajectory will prove really, really critical and crucial in determining what the Fed does going forward.
All right. Let's hop across the pond to China. What do you make of Xi Jinping, who apparently the Chinese government asked U.S. CEOs to wait an extra day after the development forum to speak with him, so they all delayed their flights. So what do you make of his overtures to U.S. business leaders?
I think this is coming not long after the meeting it had with Joe Biden in San Francisco in November. Again, the idea is to sort of thaw this relationship that seems to have hit a low. It's important to understand that what's happening right now is a situation where China actually really needs this sort of collaboration with the United States. The growth situation in China is the worst that we're seeing in decades. The challenges there are well documented. You have very high youth unemployment. You have the property issue. You have a population that is aging. Only recently, we're beginning to see deflationary pressures as well, which is really symptomatic of very weak local demand. And clearly, the leaning of China towards, this export-led growth kind of has to continue for a bit. Again, the challenge now is that the allure of China as a global manufacturing hub seems to be ebbing away. Wages have essentially doubled between 2012 and the end of 2022. Countries like Vietnam, Bangladesh, even Mexico is beginning to pick up the slack in terms of manufacturing. So that competitive edge that China had with manufacturing is sort of slipping away. So it's very important for China to seek a really collaborative stance with the United States to really kind of help it get out of this sort of economic malaise that it finds itself in. We don't describe it as a situation where China is declining. We think that there's some maturity going on there, like I'd highlighted before. But I think that the critical thing is that China needs to get a handle on the property issue that it's dealing with. If it doesn't handle that properly, it really stands the risk of maybe having a lost decade.
Let's quickly hop over to Japan. What do you make of the warning that the economic team made to, I guess, currency traders or whoever, and then the movement of the yen that we've seen?
I think that's just coming on the back of the termination, if you will, of very unorthodox, policy stance that the Bank of Japan had maintained for quite some time now. So it essentially maintained negative interest rates since 2016, also maintained yield curve control, where it basically buys and sells Japanese government bonds as it sees fit to try and control yields on the curve. Again, it's maintained an ultra loose monetary policy since the global financial crisis of 2007. And it's basically it moved away from that at its meeting last week, where it basically increased interest rates from negative 0.1 to a band of 0 to 0.1. And in the aftermath of that move, we saw Japanese bond yields slip. We saw the yen basically slide against the dollar. So that is what has basically continued to happen. I think what the authorities are essentially saying is that they stand ready to intervene in the market. They did that in 2022 on 3 occasions actually, where they spent about 9.2 trillion yuan. It's about $60 billion really intervening to keep the yuan at a level where they think it makes sense for them.
You're saying yuan, China.
The yen, sorry, the yen.
They both begin with Y.
At a level where they think that it makes sense for them. And it's important to know that Japan has USD reserves of about $1.2 trillion. So they can easily do that whenever they want to.
Exactly. Well, at the end, the quarter is over. First quarter of 2024 is essentially over. I wanted to get your thoughts on the top performing assets so far this quarter. Bitcoin, gold, cocoa. Funny enough, the Nikkei 225 and so on. Does that give a sense as to where investors might be, putting? I know past performance does not equal future or whatever, but what do you think?
So, for Bitcoin, it's really clear what's really happening there. So there's a halving that's coming up, and that's one of the major things that has really pushed Bitcoin prices. We've had about 3 halvings. There was one in 2012, there was one in 2016, there was one in 2020, and post-halving, we've seen, that price really skyrocket, really. And I don't think that there will be an exception this year. So for Bitcoin, that's what's really pushing it. For cocoa, obviously, all of that drought that's causing the challenge is what is really pushing that price. For the Nikkei 225 that we've seen, that move really was very recent and on the back of what the BOJ essentially did, So I think those are some of the things that have pushed markets. For gold, you're likely seeing some sort of geopolitical play here where, typically gold would be a hedge for inflation, right? Now, inflation in the West is essentially coming off of its, very high points that we saw a couple of years ago. So we're probably seeing countries moving away from USD reserves and going into gold as a way to reserve, their currency, and that's probably pushing up the price of gold that we've seen lately.
Let's see. Okay, we've still got a bit of time. The Mumbai has leapfrogged Beijing. It's the 3rd time we're talking about China now. Beijing with the number of billionaires. I like talking about rich people, of which you're one of them, Efosa. What does it say about India's growth trajectory? Is this part of the India narrative?
Somewhat. India's growth has remained resilient, really. The kind of growth that we've seen in India over the last couple of years has remained really, really strong. In terms of economic might and all of that, still remains, some way off from where China really is right now. But the sort of growth that we're seeing there is really strong. Over the last 10 years, GDP growth has averaged about 5.9% in India, while in China it's averaged over 6%. Nevertheless, we're seeing India, really now starting to push very significantly. And obviously, all of the woes that we're seeing in China obviously has an impact on the sort of wealth that is being created in that country. So that kind of explains what we're seeing. It isn't to say that this is necessarily a trend that might be afoot. Things can reverse in a year or two, and then, China still comes back, roaring really strong. So I think it's just around the trends that we're really seeing now.
So I guess, look, as we put all this, actually, one more thing. The global billionaires, I guess there was a 5% climb in 2023. It's about 3,200 or whatever. Is that a story of income inequality, where you are still in 2023 seeing the number of billionaires increasing while you've got inflationary headwinds, geopolitical concerns, all these things impacting people?
Yeah, it continues to be. That's always been the story, right? Yeah. At the end of the day, value is created in different ways, and the market for corporate control essentially will assign these values to what people have created, and it will basically give them their net worth. It doesn't do much to even out the inequality that we see, and I think that inequality debate will be here with us for as long as we're here, really.
Efosa Aluyi, Head of Investment, Sankore Global Investment. It's always a pleasure having you talk about global business headlines. Appreciate your time. Thank you so much.